This is Nightly Business Report with Tyler Matheson and Sue Herrera.
3 out of 3. The Dow, the S&P 500, and the NASDAQ all closed at records as the bank stocks rise and the Treasury Secretary talks up tax reform. It's official. The national debt passes $20 trillion for the first time in history. Reinventing the phone. Apple is making big changes to its flagship product, including the price. Those stories and more tonight on Nightly Business Report for Tuesday, September 12th. Good evening, everyone, and welcome. I'm Sue Herrera. Tyler Matheson is on assignment with a report tonight from a major investor conference in New York. But we begin this evening with records being set on Wall Street. All three of the major indexes, the Dow, the S&P 500, and the NASDAQ, closed at records. Financials rose, and there was optimism about tax reform. And that enthusiasm put investors in a buying mood. So here are the closing numbers for you. The Dow Jones Industrial Average gained 61 points to 22,118. Its gains were capped, however, by a decline in the shares of McDonald's, following a downbeat research note. The NASDAQ was up 22, and the S&P 500 added 8. But ask anyone who invests in this market, and they may have a different take on stocks and where they may be headed. The same is true of well-known investors like Omega Advisors' Leon Cooperman and Tiger Management's Julian Robertson, who says stocks are in a bubble.
The market as a whole is quite high on a historic basis, and I think that's due to the fact that interest rates are so low that there's no real competition for the money other than art and real estate. And so I think that's why the valuations are so high.
The stock market is own a fair but full valuation. That doesn't mean it's overvalued, but rather I think it's priced to appreciate in line with earnings. I'll call that 5 to 6%.
Those two investors spoke today at the Delivering Alpha conference presented by CNBC in New York. Also in attendance was Treasury Secretary Steven Mnuchin. And as Tyler Matheson tells us, it was his comments that tax reform is a top priority that helped give stocks a lift.
Hi, Sue. Delivering Alpha is the foremost conclave of people in the institutional investing, hedge fund, and private equity worlds. And we began today hearing from Treasury Secretary Steven Mnuchin. He was, frankly, optimistic about the probability of getting something done on tax reform before the end of the year, but less optimistic about what the ultimate corporate tax rate will be.
The president has made it clear since the campaign, ideally, he'd like to get it down to 15%. I don't know if we'll be able to achieve that given the budget issues, but we're going to get this down to a very competitive level.
The man who leads the largest private equity fund in the world, Stephen Schwarzman, shares Mr. Mnuchin's optimism about getting something done in terms of a tax cut and tax reform. But he also shares Mr. Mnuchin's view that getting the rate down to 15% is going to be a heavy lift.
I'm optimistic that the worst we'll do in that area is a tax cut somewhere between 25 and 28%.
As for economic growth, Ray Dalio, who runs Bridgewater, the largest hedge fund in the country, said that he thinks we're in a kind of 2.5% zone for growth. Here's why.
We're probably in a 2.5% type of growth environment. I mean, the real question is to some extent whether you can unleash the productivity by some of the changes that a pro-business environment can produce. I think there was more hope for that.
And speaking of growth, Jamie Dimon of J.P. Morgan Chase says that 2.5% growth, he doesn't view that as a new normal. Here's why.
If we did things right, we'd be going to 3%. But this growth, by the way, we've had over the last 8 years has averaged a little bit less than 2%. It's half of the norm. Okay, so it's a long recovery, but it's half of what we would have had in a normal recovery.
All in all, Sue, a big day of big thought and big insights from the Delivering Alpha conference here in New York City. It was a day where we heard from the Treasury Secretary and some of the really top people in the world of hedge funds, private equity, and institutional investing.
Thank you so much, Ty. Well, one thing that could have ramifications for tax reform is a breathtaking milestone for the federal government. The national debt has now surpassed $20 trillion for the first time in history. Elon Mui is following the story for us from Washington. Good to see you, Elon. So why are we crossing the 20 trillion mark right now?
This actually goes back to the deal that President Trump cut with Democrats last week when he agreed to raise the national debt ceiling. The U.S. debt actually jumped by about $300 billion almost overnight, and that's what pushed us across the line to reach this new record high of $20 trillion of the national debt.
So what does that mean for the prospect of tax cuts, big or even small?
Well, as you said, 20 trillion is a really eye-popping number, and it could make it tougher for some Republicans who have run as fiscal hawks, run on concerns about deficits and the debt, to agree with and go along with the prospect of some big tax cuts. However, key conservative Republicans, like the Freedom Caucus, have said that they are willing to stomach increasing the deficit, adding to the national debt, if it means getting big tax cuts, because they believe that can really jump economic growth.
You know, the president worked with Democrats on the debt ceiling. Is he going to be working on tax reform in the same way, reaching across the aisle?
Well, I think what President Trump made clear is that if he doesn't feel like his party is delivering what he wants, he is willing to strike a deal elsewhere. So what you're seeing is the president tonight hosting a dinner at the White House with 3 key red state Democrats, as well as several influential members of the Senate Finance Committee, which does handle tax writing. So maybe they'll be able to reach some sort of bipartisan consensus, at least amongst those members.
All right, Elon, thank you so much. Elon Mui in Washington for us tonight. Well, financials today were among the biggest gainers. Rising bond yields could help banks make more money on the difference between what they pay to get deposits and then charge to lend. But at the same time, some executives are warning that trading conditions during the third quarter were not going to be all that good. Bank of America sees revenue from trading will likely decline 15%. J.P. Morgan's chief said analysts are taking down their trading revenue estimates by about 20%. And Goldman Sachs president said conditions for fixed income trading have not improved since the beginning of the year. On the economy, we learned today that America's middle class had its highest earning year ever last year. According to the U.S. Census Bureau, median household income was more than $59,000 in 2016, surpassing the previous record of $58,000 set in 1999. The figure is adjusted for inflation. The census said the uptick in earnings occurred because more people found full-time or better-paying jobs. And the number of job openings in the country also hit a record. The most recent report from the Labor Department suggests a slowdown in job growth last month was an aberration. But other economists say that report shows that experienced workers are in short supply. Still ahead tonight, the most valuable publicly traded company in the world is making big changes to its flagship product. The upscale department store chain Nordstrom may be close to going private. According to late-day reports, the Nordstrom family has chosen a private equity firm to help in the process. A formal bid could be submitted in the next few weeks, and that sent the stock sharply higher in after-hours trading. Apple showcased its latest iPhones in a much-anticipated product unveiling held at its new campus in Cupertino, California. Josh Lipton has the details on the company's latest iteration of its 10-year-old signature gadget.
We do have one more thing. And with that, Apple introduced the world to the iPhone X. CEO Tim Cook borrowing the famous phrase from his predecessor at an event today in the Steve Jobs Theater on Apple's new spaceship-like campus. Cook called it the biggest leap forward since the original iPhone, along with a $999 price tag. Apple unveiled a slew of new features on the iPhone X, including facial recognition, camera upgrades, and no more home button, plus wireless charging, a feature already offered by Samsung and others. The flagship phone will ship November 3rd, a little later than usual, raising some concerns about supply chain constraints ahead of the holidays, although in line with Apple's previous guidance.
iPhone 8.
Apple also introduced an iPhone 8 and 8 Plus, which will be available later this month. The iPhone is critical to Apple's business. It represents about 60% of the company's revenue. Big contributor to the campus you see right behind me here, which was built for a reported $5 billion. But the iPhone wasn't the only new product announced today.
Apple TV has changed the way we experience television. Now we're at the next major inflection point. One that has the most stunning visuals ever, that are ideal for the large TV screens that are coming into our living rooms. This will bring cinematic quality to virtually everything that you watch.
The watch is also breaking free in a sense, as a new version of the watch will have a cellular connection built in, allowing you to untether from your iPhone. Apple stock dipped slightly on today's event announcements, analyst sentiment a bit more bullish. We should know soon enough, only 105 shopping days until Christmas. For Nightly Business Report, I'm Josh Lipton from Cupertino, California.
Sage Therapeutics' epilepsy drug disappoints, and that's where we begin tonight's market focus. The biotech firm said its experimental medication to treat a severe form of epilepsy that currently does not have any approved treatments did not perform much better than the placebo during a study trial. That news sent shares of Sage Therapeutics lower by nearly 14% to $76.40. Starboard Values CEO Jeffrey Smith, speaking at CNBC's Delivering Alpha conference, called drug maker Perrigo one of his firm's best investments. The activist investor, who also has had members put on Perrigo's board, said Perrigo is well positioned for growth.
To recap why Perrigo is compelling to us, you have a company that is undervalued, has a leadership position in a market with consistent, defensible growth. There's an opportunity to improve that growth with e-commerce platforms and potential partnerships with Amazon. There's a potential for substantial margin improvement in Europe. There's the potential for separation of the businesses.
Shares of Perrigo took off on Smith's remarks. They rose about 4.5% to $89.01. Progress Software hiked its quarterly dividend after reporting preliminary results that topped expectations. The software maker raised its dividend 12% to 14 cents a share. Progress up nearly 6% to $36.38. Anthem said it is still determining which Obamacare markets it will sell its plans in next year. The health insurer said it is in talks with some state officials regarding its participation. Insurers have until September 27th to finalize where they will offer coverage in 2018. The shares fell about 3.5% to $189.24. Just days after forming, Dow DuPont is making changes to its original plan to break up into 3 separate companies post-merger. The chemicals giant said it made those adjustments to allay some shareholder concerns over how the company would operate.
Pure play market verticals where you can offer world-beating, best-in-breed growth capabilities to your customers is what this realignment enables us to do. We were about 80–90% right the first time round, but the way Ed described it, we listened to investors, we did our work, and these actually create game-changing, market-driven companies in the future.
The shares rose 2.5% to $68.52. 36 senators are calling on federal agencies to investigate the sale of Equifax securities shortly after that company learned of a massive cyber breach and before that breach was made public. As we've been reporting, up to 143 million Americans were impacted, and they're now worried about their personal data. Questions are also arising about loosely regulated credit bureau industries. Aditi Roy has our story.
As Ashley Power is worried about someone stealing her online identity. She's one of up to 143 million Equifax customers who could be impacted by the company's massive cyber breach.
I think it's scary, actually, because basically a company's sole purpose to protect us and our information. If they're not doing that, then who can we trust, right?
She's not alone. Less than a week after the credit bureau announced a massive data breach involving up to half the country, more fallout from lawmakers. In a letter to Equifax CEO Richard Smith, House Finance Committee Chair Orrin Hatch and Ranking Member Ron Wyden are demanding answers from the company, asking for a timeline of events and which executives knew what and when, including the 3 who sold shares after the breach was discovered. Equifax maintains the executives did not know about the cyber attack when they sold the shares. The letter also asked the company about an arbitration waiver the consumers agreed to by signing up for an identity protection package it's offering customers affected by the breach. The company said the waiver did not apply to the cybersecurity breach and has since taken the waiver language off the website. Equifax has lost more than $3.5 billion in market cap, or 21% of its value, in the first 2 trading days since the breach was made public. And the incident is also prompting many consumer groups to question the relative lack of regulation in the credit bureau industry compared to banks, which operate on charters and licenses and face constant monitoring by regulators. The class action suits are also piling on, with the company reportedly facing more than 24 suits from plaintiffs. The highest profile ones include one filed by celebrity lawyer Mark Garagos and is seeking nearly $70 billion in damages, which would make it the largest class action suit in U.S. history. Another suit filed in federal court in Atlanta, where the company is headquartered, cites gargantuan failures to secure and safeguard consumers. One of the lawyers in that case is former Georgia Governor Roy Barnes. As those cases make their way through the system, consumers like Power are now wary of going online.
Just makes me question everything I put online.
As far as what customers can do, consumer groups are urging people to get credit freezes so no one can open an account in your name. Make sure you get that freeze with not just Equifax, but the other 2 credit bureaus as well, Experian and TransUnion. The cost depends on the state you're in and can be between $5 to $10 per freeze. For Nightly Business Report, I'm Aditi Roy, San Francisco.
So let's turn to Gail Hillebrand for more on not only the Equifax data breach, but whether you should be worried about other potential things out there when it comes to your credit. She is the Associate Director for the Consumer Education and Engagement Center at the Consumer Financial Protection Bureau. Welcome, Gail. It's a pleasure to have you here tonight. Thanks for joining us.
Thank you.
Let me start out with the basic question that Aditi Roy posed in her report. Do you think the country's credit bureau industry is adequately regulated?
We share the same deep concern that members of the public are expressing about this data breach, and we will certainly be looking into it, along with many others in the federal government who will be doing so.
But do you think that there needs to be more regulation or tighter regulation?
It's clear there's something to be looked at here, and there are a lot of people in Washington who are going to be doing that.
All right, let's talk about the credit freeze issue. First of all, do you think that we have an issue with Experian or TransUnion, and what should a consumer do, or an investor do for that matter, if perhaps we see the same sort of situation develop there? And do you think we might see that?
So data is valuable to criminals, and people are trying to steal it. So I can't tell you what will happen with the other bureaus, but if you're an individual who's worried about the potential for this data breach or any future one, to have someone opening accounts in your name, the credit freeze is your best option if you don't need to be active in the credit market, if it's going to be easy and simple for you to lock people out from opening new accounts in your name. If you put the freeze on and you are about to get a car loan or something else where you need your credit, you will then have to take steps to remove it when you want to use your own credit. But it does stop the thieves from opening accounts in your name because the creditor cannot see your file. They will not open your account. That's your best protection. You have 2 other things you should also do or think about doing. One is the fraud alert. That's a lighter form of protection, but it does tell creditors, hey, check if it's me before you open an account in my name. And finally, and unfortunately everybody needs to do this, check your accounts. Right. Make sure that nobody is putting charges on your accounts, and check your credit reports to make sure that they are not being, no accounts are being opened in your name. If you find an account you don't expect, you can dispute that and should do so.
As I understand it, and correct me if I'm wrong, credit freezes protect you from what's called pure identity theft when somebody sets up a new account in your name. But it does not necessarily protect you from people putting charges on your credit card or accessing your bank account. Is that correct?
That is absolutely right. The credit freeze stops new accounts. The only way to address charges to your credit card, your existing accounts, is to watch those account statements very closely. You should look at all your accounts statements every month, and you should raise a question if anything's on there that wasn't you, even if it's small, because sometimes a crook will try a small transaction and come back later for a bigger one.
Gail, thank you so much. I know we'll be talking to you again soon.
You're very welcome.
Gail Hillenbrand with the Consumer Financial Protection Bureau. And while Americans are wondering if their personal information has been compromised in the Equifax breach, there is a new threat you need to watch. It is your cell phone number. That number is now becoming the key to your identity. Think of it as a new social security number, and anyone can use it to find tons of your personal information. Andrea Day has that story.
The most shocking thing was how quickly I found it.
Just a few minutes. That's how long it took this guy to track down intimate details about our producer.
And that was all with just a cell number.
Just a cell number.
We blurred out most of the images, but he found reams of information.
I found her date of birth, I found where she went to school, for family history, what properties they own, what parking tickets she has. This is the street view of her house right now.
And all of it without even knowing her name.
A security risk?
It's a huge security risk. Nobody wants to change the cell number today, and so cell number has become an integral part of your identity. And that's where the problem starts.
Full disclosure, Archie Argawal is a cybersecurity expert, but he says tracking down the info doesn't take much.
No experience at all.
Where do you start with somebody's cell number?
So the best place to start is Facebook.
We won't show you details, but
most people don't realize that Facebook, by default, makes your phone number accessible to everybody through their search.
He says Facebook does allow you to limit it to just friends, but there is no way to stop friends from finding you by your phone number. If you try to remove your number, Facebook limits some features. Facebook tells us your phone number has, quote, a setting to control who's able to search for you using that info, and that adding a mobile phone number to your account helps keep your account secure and makes it easier to connect with friends and family on Facebook.
This information is very incriminating, right? I mean, if you look at it from a job perspective, you have to give your cell number when you apply for a job. Within 5 minutes, I know everything about you. Without even seeing whether you qualified for the job, I can just reject you.
And he says that's just the beginning.
I have your online identity. I have pretty much everything. I own you, basically.
And his advice? Treat your cell number as something even more important than your social. Only give it out when you absolutely need to. And for the record, he uses a number from Google and changes it at least once a year. He wouldn't even give us his real number. For Nightly Business Report, I'm Andrea Day.
Wow. Coming up, a critical artery of Florida's economy reopened today. We will take you on a tour of the Port of Tampa. Travelers plans to temporarily suspend its share repurchase program while it assesses its losses from Hurricanes Harvey and Irma. Late last night, the property and casualty insurer said it estimated catastrophe pre-tax losses in the range of $375 million to $750 million. Shares of travelers finished the day fractionally lower. Millions of people in Florida are still without power following Hurricane Irma, and FEMA Administrator Brock Long says it could take weeks for power to be restored.
We have been working with our partners at the Department of Energy to pre-stage power crews, not only in Florida, but all over the southeastern United States. But let me reiterate, it takes a long time for this infrastructure to come back up. It may take multiple days, if not weeks in some areas, as we've been saying before the storm hit.
The head of FEMA also said the hurricane destroyed about a quarter of the homes in the Florida Keys. But the port of Tampa reopened today after sustaining only minor damage during Hurricane Irma. That is key to getting commerce and the Florida economy moving again. Carl Quintanilla takes us on a tour of this critical piece of Florida infrastructure.
You cannot predict what a hurricane is going to do.
Paul Anderson runs Florida's biggest physical port, which receives lumber, coal, steel, even orange juice, and gas. When he opened the port, truckers who had sheltered in place hustled to get to their rigs and fill up.
My motto is, you hope for the best and prepare for the worst. And we did. We hurricane exercise at least once a year.
The fuel came from tanks on land that had already been filled up so as not to be empty and crushed by Irma.
Think of a Coke can that was empty in the wind versus one that's full. And it's very similar. They're rated to handle high wind and hurricane, but they have to have fuel in them.
Each truck holds about 40,000 gallons. That's enough to fill a gas station's 10,000-gallon tank. But when it comes to Irma, Anderson says it's clear that Tampa really did dodge a bullet.
We're having this conversation right here now because that storm moved very much at the last minute, 40 miles. It changed everything for Tampa, for the Bay, for millions of people, and for our ability to get fuel.
For Nightly Business Report, I'm Carl Quintanilla.
The Port of Tampa is the biggest one in Florida. It generates nearly 100,000 jobs and delivers some $15 billion in annual economic impact. And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. Have a great evening, everybody. We'll see you right back here tomorrow.